My name is Ben Wyndham, and this is my Group 6 stock portfolio. The first company I chose was Toyota, ticker symbol TM. I chose them because obviously they've been one of the best car manufacturers around the world for years. They were founded in 1937, sell about 10 million vehicles a year, and anyone in the automotive industry obviously knows that Toyota is consistently one of the best because of their quality of parts and just their attention to detail. And it's evidenced by becoming the number one selling car brand in the world in 2020 in 44 different countries. These are some of their stats. PE ratio of 8.8 is really good. The beta is right where it needs to be. They pay a decent dividend, which caught my attention. And then the profit margin is 9.8%, which isn't too bad. And then the RSI, which tells if a stock is overbought or oversold, is right in between 70 and 30, where it needs to be. The second stock is Pfizer. I chose Pfizer obviously because of all the news and attention on them. Their COVID-19 vaccine was the first to become fully FDA approved. However, their vaccines only account for 16% of their total business or revenue, but that's probably going to change pretty soon. Here's some of the stats. The PE ratio is a little bit high, but I think their forward PE ratio, which would be their prediction for next year, was I think at 12.3. Solid beta. Their profit margin is really good at 23.8%. Their dividend yield is really good also at 3.42%. And then their sales of the quarter over quarter is really good too at 92.4%. Obviously that probably won't stay that high, but due to the vaccine becoming FDA approved, it's just skyrocketed right now. So I think these are both really good companies that could benefit us.
Hi, my name is Michael Guzzel. I'm part of Group 6. My stock that I chose for the investment game is Mercantile Corporation, AMT. I looked over a few things before I bought this one. One was price to earnings ratio. It's considerably high for this specific stock. Average in the market that I found was 20 to 25. This one is 60, so it's very high. Could be possibly overpriced, or it's expected to have high returns in the future. It's what I found on Investment Zen. The dividend yield is lower than average at 1.65, with the average being 2.2. The 1-year beta shows that this stock is less volatile than the market because it's lower than 1, which I think is a great thing for a real estate stock at the moment, just because with everything being growing in real estate and prices are going up, if there is a big dip or that bubble does change, we won't see a big difference or decrease in that stock price. Growth was 67% in the last 6 months, which is pretty good. I'm happy with that. And I did a short span to see what the growth was, just because with the nature of this game, I'm not expected to hold this stock for very long. So this is the EPS forecast that I found on NASDAQ.com. It just shows what the expected forecast is in the next 2-3 years. So current EPS is 4.98, and then we're expected to double that by December of 2022, which is great. And then it's going to go up 2 more points by 2024, which would be a good return.
The stock I chose for this assignment is Digital Turbine Incorporation. The symbol is APPS. It is a software application-based company that provides media and mobile application programs that can monetize, track, and control devices. It has a $5.947 billion market cap, a beta of 2.35, a PE ratio of 103.49, and approximately a profit margin of 12.68%. And today it had a stock price of $61.89. Why Digital Turbine Incorporation? There's heavy speculation that points to the stock doubling in price within 52 weeks. I bought the stock at around $58 a share, and within a year, there's heavy speculation that the stock could reach over $105, $106 a share. There's a decent profit margin at 12.68%, Earnings grew over 128.8% within the last year. There is a long-term growth rate at 50%, and the software industry has experienced a massive growth spike during the pandemic of approximately 240%. And the area where Digital Turbine Incorporation works is vital for mobile services. They create the software that allows apps to work on mobile devices, especially on Android. And with an increasing consumer base, they are positioned to have a more competitive advantage with their competitors.
Hello, my name is James Sherry, and for the Invisibility game this semester, I invested in Penn National Gaming with the ticker symbol PENN. So PENN is mainly a gambling business. They do a little bit of resorts as well, but they mainly gamble. They have about 41 racetracks around the northeastern United States, running from Illinois to about Massachusetts, and their market cap is currently sitting at a 12.5 billion. Pretty large company, owning 41 racetracks and about 20 hotels, with a new one opening up in Pennsylvania, which is why one of the reasons I invested in them, is pretty promising. Their beta is a 2.5, which is a very volatile number. They're very risky, but as we can see here, from March until the next March, so 2020 to 2021, it just rose about almost 100 points. Their PE is at 28.3, so higher PEs, that's very high PE, but they can tend to mean that it's a growing company. They don't really pay out too well, but growing company with a high beta could mean a very high and worthwhile purchase in the short term. And my other reason was NFL, NHL, and NBA betting all starts around with the same time frame from about September to March. And as we can see here, starting at about September, which was right here, and jumping in March, and then September starting right here, and it dumps at March. So it rises and then it dumps at March again. Again, it's mainly football. A lot of betting goes on in football. So I started to notice that this start of September was right here, so I'm thinking maybe that it goes up a couple points. And those are the reasons I invested in Penn.
Hey, my name is Nicholas Robinson, and the company I chose to invest in was Alibaba, which is it's a popular Chinese multinational technology company that specializes in things like e-commerce, retail, internet, and technology in general. It's a company that's somewhat similar to Amazon in the way that it's basically just this really big online marketplace. The market cap of Alibaba is $468 billion, so it's quite a large company with quite a few investors. The beta is 0.5341, which means that it's typically less volatile than the market, which is something that stood out to me when I was making the decision whether to purchase or not. The price to earnings ratio is roughly 20.6, which is relatively high. And this indicated to me that investors valued this stock and saw something in it for the future. And finally, I purchased this stock at about $162 per share on August 30th during a slight dip in the price, and now the price is currently around $168. So I guess we'll see really where it goes from there.
Representing Group 6. So the stock that I'm going to be talking about, as you can see on the screen, is AMD. I'm not sure if you guys have heard of AMD before. You may have heard it if you're a gamer like me, but AMD is pretty much just a company that ends up making processors, graphic cards, and they do a bit more too, but that's pretty much what they're known for. So what struck me, and the reason why I chose this stock, is because if you look at their market cap, their EBIT, their profit margin, it's all right, but quarterly revenue growth, look at that increase right there. That's pretty insane. So you can see that they're starting to move, at a pretty inclined pace. So I was like, you know what? Let's see. Right now, I see that it's kind of dipping. If you've looked at the charts, it's dipping a bit right now. But from seeing this, I can tell that they've been growing at a pretty insane speed. And this isn't this isn't all of it. Just check this out. Okay, my face is missing for a second, guys. All right, there we go. I'm back. Anyways, so if you look at their current ratio, this is what struck me though, like the most, was the fact that they have literally over $2 million, or not million, that's billions, yeah, because it's in thousands, more added in their current assets, while their liabilities are literally staying the same. So this tells me that they're handling debt at a pretty darn good rate. But yeah, that's the reason why I chose AMD, and I am out.